technically we need to, do we need to call the roll for the regular
I
meeting?
was thinking
We do.
yeah.
Tucker's given us a yes, so it's a yes.
All right, everybody. Neil Butnick,
Here.
Judy Neville, Tom Schulte,
Here.
Amy Carroll, Todd Lavieri,
Yeah.
Michael Chen,
Here.
Chris Labrie,
Here.
Victor Alvarez,
Here.
Maria Weingarten, Bob Hamill, maybe, Colin Dobbin,
Here.
and our first selectman, Kevin Monahan. He shouldn't have been on the last one, by the way. I shouldn't have
I
said
was
that.
actually accused myself.
But that's what I mean. I shouldn't have,
Yeah,
I shouldn't have
exactly.
said you were coming. Yeah. All right.
You did everything right. You sat in the back, and- all right. Okay. And you got everybody? So we're good.
Yep.
Okay, we have two minutes to approve. We have the regular meeting back on the 12th, and then we, as you recall, we had a special meeting with town council. So I need a motion to approve both minutes. If I can do it in one motion, would be good. Neil, a second.
Second.
Victor's a second. Yeah, I was gonna say. Okay, all in favor of approving the minutes? Aye, opposed? So moved. Okay, first selectmen's update.
Good evening, everyone. Good to see everyone. First of all, I want to thank everyone who sent well wishes after my Easter Sunday event. And I would tell everyone that obviously I'm in very good shape, except for a little lost vision here, which I'm learning to deal with. But anyway, and I also would note that 2 doctors out of 3 so far say it's probably COVID related. So I'm still waiting for the answers to that. COVID. As you know, from the Thursday updates from the health department, we continue to do our Monday, Wednesday, and Friday COVID testing. We had a spike last week, as there is throughout Connecticut. However, hospitalizations are not increasing significantly, so that we're still green as the CDC now defines things, although we're certainly at 11%, I think. Is a pretty high positivity rate. We're also doing weekly vaccination clinics at Irwin with for boosters and those who haven't been vaccinated. We'll continue that. And finally, there's also the test to treat sites in Norwalk, Riverside, and Ridgefield, who people want to go get tested and get treatment that's available immediately with those pills you can take. So there's only 3 sites in the neighborhood, though, that you can do that. Capital projects. CHP has been installed downstairs in Town Hall. I don't believe it's operational yet, Tiger, but very close to going live. Eversource Gas, 2 weeks ago, Pura, the regulator of Eversource, issued a ruling stopping the expansion of all the 3 gas companies in Connecticut as far as the incentives that they had on former Governor Malloy's 10-year program. So that program is stopping early, 90 days notice. It won't affect, we had a meeting last week with Eversource. It's not going to affect our town expansion that's already on the books: Elm Street, Pine Street, Grove Street, Forest Street, and Lapham Center. But because we'd already signed up, but it will probably affect some of those who are signing up after the 90-day period, because they now have to charge more for the cost of hooking up, et cetera. So we've contracted for solar at the high school. I think like 6 cents a kilowatt hour, and as well as the Dunning lights that will go on the auxiliary gym roof at the high school to power the Dunning field lights. The 1837 Ponisher cell tower, Connecticut Siting Council has scheduled a public hearing on June 28th, probably in this room if it's going to be in person. Otherwise, if they continue their virtual meetings, public hearings. The PD renovation project is now moving along with a meeting scheduled for this Thursday. They had a special meeting last week to hear the counter proposal about what we call the town hall plan, removing the rear and building that entirely new. We'll have pricing on both of those 2 alternatives on Thursday. And then back to this body and the town council in June to make some decisions. We are doing a separate project with staff only and police department staff, and on the range in a location in town. We will probably have something to discuss there at your next meeting. We have our 830J affordable housing plan, which is due June 1st, is almost done. We have another meeting on Thursday to finalize that. We had public comment. And the 830G moratorium application, after getting some comments from a rather skilled lawyer who wrote the law, we're going to get that back in very soon here. And finally, the 220L.
Kevin, who's the lawyer?
Tim Hollister.
Oh, yeah, the one, all right. I thought you meant ours.
He makes a habit of commenting on people's applications before they're even filed. That's what the public comment period is for. And then since he wrote the law, he knows how to use it.
Oh, yeah.
220 Elm, I talked to the superintendent this afternoon. He's moving forward with his planning. I should have mentioned we are so tentatively agreed with the owner of or the property manager and the owner of 39 Locust, where the Board of Ed is, to use that as swing space for the police department. It'll be entirely there and at a blended rate for what the superintendent has been paying for the space. And so that'll be through 2024. And the lease otherwise would have gone to 2026, but the superintendent had already given notification of terminating that. So, and then finally, the ARPA funds will be back here in June with the community foundation recommendations and perhaps one or two other items from the Board of Selectmen. And then also the library project, as you know, is they came and gave an update at the Board of Selectmen, and the Board of Selectmen will probably take that up next Tuesday. So that's what I have.
Will all of the police operations, everything be able to go there? Or do you split it up?
No, everything will be there except what we're going to have cooperation with Darien with respect to housing prisoners and that type sort of thing during the interim.
Okay.
And the dispatch may either be there or at 39 Locust. Also, the superintendent told me that Gridiron is leaving all their furniture for them, and so we'll have all the furniture from the Board of Ed for the police.
Very good.
So
Okay.
that's it.
That's it.
Yeah.
All right. Thank you. Good question.
Can you elaborate a little bit more where we are with the library? Because I know that they have the time pressure in terms of when they finish the building and moving to address the.
Well, the library gave us the same update they gave you, and they haven't actually made a request yet.
So they haven't made a request yet.
So I don't know where we're going to come out with that dilemma.
Oh, so do you anticipate Tuesday that they'll make a request at your meeting? Is that what you're?
I expect, they were asked to submit the request.
Okay.
Just what I have volunteered myself and my partner in crime over here, Mr. Carl, to work specifically to get to closure by our June cycle of meetings. And that matters because, as you all know, in our April meeting, we talked about putting together whatever line of credit they'd need. And we said that would be June or July timeframe. You remember that, right? So now we've said, okay, well, that's happening. So we need clarity on the path forward. So I've asked Steve and I to help put together, where are we? What's one set of the facts, work with the selectman's office and the selectmen to figure out, get a solution to how to move forward. And we want to get that done in June. So
Can you?
stay tuned. I don't have, somebody
you-
asked me what our plan is. And I said, well, I just volunteered for this 24 hours ago. So I don't really have one yet, but we will create one.
Careful raising your hand.
I know.
Please.
It's one of my favorite members of the board too.
Where do we stand with the form of the letter of credit? I mean, we had agreement, but in terms of the actual doc, where does that stand?
We had, I'd say we're about 90% there in terms of, and then we
had sent back comments from the liaisons, which included Tom for purposes of that document. But then other things happened, and we decided not to move ahead of it with it in November, December.
I'm not sure we had ever shared that draft with the library, actually. Had we? I'm not sure, but
We gave you our comments.
Yeah.
We were going to run them by the council again for incorporation, revision, whatever. And that's where it stopped as far as you know.
so we'll share that with
So
them.
like that, those are the things we have to, where are we on that? What's left to be open? Have they seen it and all that? Those are the things we've got to now kind of unglue.
Right.
You have the current draft? you think?
Mhm.
Okay, so we could take a look at that. Okay, good question.
And would you envision that in June, we would have a copy of the draft that both parties have looked at and feel comfortable with? For the June meeting?
There's no reason why we can't have that approved in June.
Yeah, so that we can get it in place, right?
So it goes to the town.
Yeah.
Yeah, but we're talking about the loan agreement.
Yeah,
Yeah.
I'm
exactly.
sorry, is there a need for money in June?
No,
No,
October.
No, it was all about,
Well, there
There's
might
a
be.
Because what I
might be.
envision is if there's a meeting on June 10, I envision getting this thing on the 9th and say, hey, what do you think? And I just.
there's
that's-
no need for money from the last update we just had from them until they said, I think it was the September, October timeframe.
Yeah, that was my
I
understanding.
don't think that's
If-
right.
On the line of credit. Now, there's also what they've been asked to do by planning and zoning, and there's a money issue. Remember, they all wanted to have some of that architecture money, engineering money. I don't remember all the specifics anymore, so that they could, as they work their plan forward till February of next year, they wanted to have certain things done so they could have the current plan of mandated the building being moved and having that funded. That is money they need, I believe.
Right.
Yeah, and that's on the to-do list for the next month.
That's right. That's the to-do list. That's exactly
Because
right.
if the line of credit is
That's
going
right.
to be the vehicle to solve that problem and to provide liquidity for library to begin to pay for engineering architectural fees, then we need to have a final vote in June. We need to approve this, the line of credit and the funding resolution in June.
Agreed. And on the line of credit, did you look into what, to my knowledge, I don't think as a member of this board, we've ever done a line of credit for anything that I know of.
No, me either.
So just in terms of the steps, the processes, the approvals, does town council have to approve it? We need to understand all that too.
I'm not sure actually,
You
anybody.
need to approve, I
I
don't
think
know.
the Board of Selectmen is the only one that needs to approve it. We will get your input on both sides.
Yeah, I just don't know.
Well, we'd have to approve the
Hasn't been appropriated.
we'd have to approve the resolution for the funding
Right.
and for the bonding if need be. So yes, the Board of Finance will have a role
We-
to play.
As the town council.
And then
Yeah,
the
and town
Board-
council.
town
Yeah,
council
but-
will receive
Yeah.
everything from us.
So we just need to have all that. We don't know what those steps are and make sure we're compliant with all the rules and everything. So, yeah, okay. Okay, all right, thanks for that. Brian,
Let me just start by saying we had a RPAC meeting today. Brian is here addressing us on our performance, which we asked him to update, but we didn't realize that he would come in with such a bang. It would be a moving target like it is because he keeps updating it with
every hour.
every hour. And he's going to outline some things decisions we're going to have to make later in the year. So let me introduce.
Right, but how much time do you think you need to give us this update? I ask you that only because
15 to 20.
15 minutes,
I
perfect.
mean, I could do in 10.
15 minutes, it's fine. It's
Yeah.
fine. And we may have some questions too, but
Right.
just so you know, we're under a little bit of pressure and
Thanks for sharing that.
Yeah.
Yeah, no,
It's only
I'll
money.
keep that in mind. Yeah.
It's a lot.
you
of
can always
money.
come back. Some things we can't.
It's not share.
You're sharing, but for some reason you're sharing.
Let me stop and try again.
You didn't document some of this? Just delete.
Share screen.
Let's see.
It's a big thing.
That should do
There
it.
you go.
Good.
Good job.
That's it.
Okay.
But I don't.
So appreciate there's the
It's not here.
performance and where we were and everything. And then
Right.
obviously things have changed dramatically in 100 days and
Right.
understand all that. So, okay.
Yeah, that's very good. Good summary. But yeah, good to see everyone this evening again. It's been some time. And yes, under the last circumstances, the markets were much rosier. Well over 25%, I think they were talking about. But as the saying goes, we know trees don't go to the sky, and we were finally seeing a correction. So as far as what I was planning to cover is just a quick recap of the markets, which it really encompasses the town's portfolio, where there's 3 portfolios: the pension, the OPEB, and the Mildred Marcy Trust. And then, just share brief perspectives with respects to volatility and talk about the discount rate. Because when we talk about objective, the discount rate is certainly a big objective with respect to keeping in mind the asset allocation for the town. So I will go quick, but don't let that jump in where there's a question or I need to dig deeper. and I'll be glad to do so. So with respect, just to recapping the market performance, and this is all through the first quarter. Hopefully you could see it on the screens. I could try to blow it up, but I'll give you the numbers. So through the first quarter, no surprise, equities, both US and non-US equities, international equities were down over 5% in the first quarter. So both markets were down. The big one, or when I say the big one, was more surprising, is the fixed income markets. That's in the center of the page. And so fixed income, just as represented by the Bloomberg Barclays aggregate, represents the fixed income markets, that was down 6%. And we haven't seen worse fixed income returns since beginning of 1980 as of the first quarter. What's that all predicated on? And that's really been, well, of course, inflation, but at the combat to inflation is higher interest rates. And so what I'm pulling up on the screen is looking at what interest rates have done, both on the short end of the curve, which is more controlled by the Federal Reserve, and the longer end. And so the move that happened in the interest rate, the markets are forward looking. So the Fed's only done 75 basis points, but the market has pushed interest rates up over 200 basis points on like a 2-year perspective, and on a 10-year perspective, this is as of the first quarter, ended at 2.3%. It's much higher since the end of April, but that move and the higher interest rates, since there's an inverse relationship in fixed income, higher interest rates, lower prices, that was responsible for the drawdown in the first quarter for the fixed income markets. I'm going to skip some of the different segments of the equity and fixed income market. I can come back to that if there's questions about the different segments. But just as it relates to the 3 town plans, up on the page 8, which I have up on the screen, is the town's pension plan. So overall, through the first quarter, down 5.78%. Still squeaking out a positive return on a 1-year basis, given the strong returns from last year. So on a 1-year basis, up 3.25%. And then just really keeping the longer term perspective, since this is a long-term objective for the pension, the OPEB plans. The absolute numbers going back almost 20 years, so we always, thank you all for putting the trust in Vanguard, but, up over 7.9%. And I bring that up because it's always in relation to the discount rate, which is currently 6.75%. So that's something we keep in mind when setting the asset allocation targets. And I'll come to that in just a moment. The bottom of the page just shows where we are, the asset allocation versus our policy targets. And so we're within our bands of plus or minus 5% at the asset class level. When they move 5% away from the policy targets, that's when we rebalance the portfolio. We do that. We look at rebalancing as part of a risk measure. We want the portfolio to be the asset allocation that's decided by the committee. And so if it moves outside of 5%, we think that's changing the risk profile of the pension or the OPEB plan. So we're not close to that. And even with April, there's been some rebalancing activity because we get cash flows into the pension plan. So we're closer than these targets at this end of March. The OPEB plan, smaller in assets, but it has the same asset allocation. From a return perspective, just a little bit different from the overall pension plan, mainly because of difference of cash flow. So the OPEB plan was down 5.76%. Just reminding you, the pension was 5.78%. And then the Mildred Marsley Trust down 5.74%. So they're all relatively close. Just quick perspectives on some, volatility. I shared this. Bear markets, we're not in a bear market. We are certainly in a correction. Correction is usually defined as a fall of 10% from the top. A bear market is defined as a fall of 20% from the top of the market. We're not there yet. I mean, we're certainly approaching it, but this page is just giving some perspective that bear markets do happen every, 5 to 6 years. It's, of course, we had a very quick one in 2020 with COVID. No one saw that coming. But the purpose is to keep that long-term perspective of the plan, since we have that long-term horizon, and that has served the town well, all of the plans, by not trying to time the market. And then just giving some perspective, we were talking about this in the previous meeting, is, a bear market historically has only lasted 230 days. Yes, the average drawdown has been on average 28%, which is painful in the short term. But looking at that longer term perspective, bull markets tend to be much longer and much stronger. I'm going to bring this to page 25, because one thing that we keep in perspective and impacts the finances of the town is what the discount rate is for the pension plan. So we update our capital market forecasts every quarter. We look at the asset allocation with respect to that discount rate. And this is something that, as we approach the end of the fiscal year, that we'll revisit. There's no decision, no discussion today, just letting the broader committee know that we look at the asset allocation with the objective of, can we achieve that with the current asset allocation? A little bit, our forecast as of 12/31, it's getting a little stale right now. Shows that our median expected return for this portfolio would be 5.8% at the median. So a little bit lower than the discount rate that we currently have. But that'll again be a discussion for more towards the fiscal year. So I try to cover the recap of the markets, just some perspective around the volatility in the markets, and then just respect with the objective of the plan of achieving a certain discount rate. One thing that's not in the presentation, but I think the committee, commissioners should all be aware of, is that the funded status. And I think the town of New Canaan is in and has been in an envious position of being overfunded, having a funded ratio over 100%. And as I was sharing with the RPAC earlier, looking at other Connecticut municipalities through the state of Connecticut, only 8% of close to 200 different municipalities have a funded status over 100%. So that's something that we keep in perspective with respect to setting asset allocation as well. So it's a lot. Neil, did I forget anything?
You whet their appetite with the discount rate, the alternative investments. We're going to look at discount rate, absolutely, but
Right.
alternative investments, we were very surprised that many of our neighbors use these to get returns, even ones that have great credit ratings, right?
Right.
So it's
Right.
something that we should at least look at.
Yes, we've been discussing that over different meetings, and I think it's still an open topic as we, go forward, is to look at the asset allocation. Are there ways to improve the risk profile and the return profile? And that certainly would include alternatives.
Can you show that one chart you showed us in the RPEC? I think it's a good chart, the portfolio allocation of other towns.
Yeah, the average allocation.
This one or this one?
That one.
That one.
That's
Okay. Yeah, this is looking at the asset allocation for public plans across the country. It's certainly weighed heavily by some of the large state plans. And this is on the left-hand
10%.
side, looking at the allocation at the end of 2021. And the right-hand side is how those asset classes have shifted over time. The biggest thing I would say is that you've seen the shift is, if you looked at this top half of the chart, is the increasing exposure of public plans in general to alternatives. And when I say alternatives, private equity, private real estate, hedge funds, all in those buckets. One of the perspectives I would provide as far as, why have, public plans sought out more private investments, and that's also related to discount rate. In general, it's not on this slide, but public plans have had a discount rate of 7% or higher. And in order to achieve that, many plans have looked to add these private asset classes to get returns above what the public markets can offer you. But this is also, the next slide, just keeping this in mind, this was talking about funded status. Why this is looking at the funded status over time of public plans, those large same public plans, the national average is closer to 75% funded.
This is not Connecticut.
This is not
total.
Connecticut. Yeah, this is looking at
All states, all local.
all states, all localities, yes. And this is all could be publicly sourced. It's from the public plan database. So it's all publicly available data.
Do you have any idea how the pension funds that have moved into alternative investments have performed? I mean, everyone moved into them when the market's going up, right?
Right,
So
right.
this is the come to Jesus meeting when they go
Right.
the other way. Right?
Right.
And it's, because actually with fixed income yields going so low, they're just trying to get something.
Sure. Yes.
So I guess it's a little early on that, but that would be curious to
Yeah.
see how they did when things weren't all positive.
I think that's a good point. Two great points you made. One is there has been a search for return because of how low interest rates have been since 2008, close to zero. And so you couldn't get return from the fixed income markets either. That's the silver lining as far as what I showed about the fall in fixed income. But now we finally have interest rates high where you can make some investment, where you can make some return from fixed income. So yes, so public plans also couldn't get much from fixed income. I would kind of say I agree with you as far as it may be too early when you think about an asset class like private equity, which probably is the biggest allocation of the alternatives. You're talking about lockup times of at least 10 years. And so it takes some time to see those returns. So I think as we start getting returns of, 21, 22, you'll see how some of them have fared.
I would say it's not just state and local pension plans that are moving alternative investments, but many portfolios moving alternative investments, not just for returns, it's for a hedge and reducing volatility. So a lot of them are saying, look, I don't want to depend on the equity markets, which is overvalued. Bonds are so low interest rates. If it goes up, it's going to hurt. They're investing in alternative investments as a hedge, like hedge funds as a hedge against rising interest rates, against equity going down. So I think it's a very good strategy. And not just, like I said, municipalities are doing this. A lot of different funds are doing it. And I think it's something we should seriously look at over the next 6 months.
Right.
Yeah, I mean, the way we've been talking on the RPAC, it seems like, and folks like Michael that bring a lot of experience, it seems like this is the new normal. There is a role for this. And the question that we wrestle with is, what is the role for us, right? As Brian will tell you, there's somewhat additional cost. There certainly is additional complexity, right? It's not as obvious of, well, what does that mean for this, the way it might for equity or fixed income, right? And, there is this, how easy is it to get in and out? And then in the larger sense, when you roll it in, you have to figure, well, what role does volatility play in a fund that's over 100% fully funded, right? So we're more or less in the promised land now. And so we're not stretching to make every dollar. We're looking to kind of do it. And so that's what we've been wrestling. And with Brian's good help and with folks like Michael, and I think we'll, in the coming meetings, have some conversations about, is there a role for this and what do we think?
Well, you would have data of other clients who have put together something that's hedged this at some percentage of the total portfolio, and you'll have a return to have something to look at. Okay.
Right.
Can
Yeah,
you
that's-
get in public portfolios like this on private equity hedge funds, can you get valuations more than periodically, or are you still bound by the same rules that all investors are, where you get quarterly, maybe semi-annual reporting, and that's it?
So yes, you have less transparency into it, and there's the marks usually come at a delay. So say speaking for private real estate, private equity, the returns are usually lagged by a quarter because the fund companies are trying to generate what the portfolio companies are doing. So the returns are usually on a lag, at least on a quarter lag as far as performance. The other point is on private investments, you typically don't mark your entire portfolio every quarter, usually a portion of your portfolio each quarter. But you have to value each company at least once a year, but not every private investment is getting marked every quarter.
And real estate, but hedge funds, maybe not.
Hedge funds could be, hedge funds is a broad term, and some are more liquid than others and be able to mark others.
So how do you provide reporting to the governing body like this if you have less transparency?
Well, we would still get reporting on a quarterly basis. So we'd be able to report returns each quarter. Some private investments may be lagged. You might be getting the valuation, say this report is all as of 3/31. The private holdings might be as of 12/31. but they would still factor into the overall performance of the plan. So we would still get that from those providers.
Yeah, but you would get the distortion of the delay. For instance, if this were
Correct.
true this year, what you're reporting on December 31 could look pretty good.
Right.
And then it would not be, and when it comes back out, you're going to be lagging.
It's a valued point as far as the lag, and that's seen as one part of the diversification, right? But it happens on a lag.
That would complicate the discount factor.
Yes, That's the-
calculation.
that's the thing.
Assessment. So it's nice to have these things, but you really have to look at all the quills in the porcupine.
So
Well,
my
you
question
wouldn't
is,
be able to
my
get the
question is that
valuation
if,
for year end until like February 15th, like there's 45-day delay. But on February 15th, you could get the overall valuation of what you did the year before, right? So you can't get it all, but you still can get a full valuation of what it was on December 31st. You just delayed.
Correct.
Victor?
yeah, so I'm assuming we have 0 alternative investments right now in our portfolio.
We have 0.
If we were going to change that, what kind of approvals would we get, or where do you get your direction from? Do we just tell you change the allocation, or?
Well, we would do it in conjunction with the RPAC. And so it would be a discussion together to understand, when I talked about these capital market assumptions, we would look at the impact of what would adding, for instance, 5% or 10% to these asset classes due to the return and risk profile over a long period of time. We use a time horizon of over 30 years. That's what's used by the actuary. So that's what we would look to forecast. And so
And then
there's no
ultimately, we would have to have a vote from the Board of Finance to approve that?
I think, I don't know,
Yeah,
but
that's
I-
what we would
but
do.
when the
So
RPAC
our-
would make a recommendation. to the Board
Our
of
pack
Finance.
is the retirement
Yeah.
plan for the town.
Mhm.
And so
But it's advisory, isn't it? It's an advisory committee.
it's an advisory committee, but I
I
think,
assume we have to take.
I think what would happen is we formulate a plan, we talk to the management here, of course, we come here and have a discussion on the key points.
Yeah, I think you would make a recommendation that we would vote
I
on
would
if
take-
we were to change those allocations.
Yeah.
That's right.
We're starting that process, but yeah.
there's
right now-
there's a lot to weigh, and nothing's foregone. It's just, let's continue to
Yeah.
evaluate.
According to
look at
this, if you look at that, we're 100% equities, fixed income and cash. Right? And this is 66%-ish of fixed income and equties and
Yes.
cash. So there's
But-
a third that's other things, which is fine. So it's worth.
But most of those dollars are very large state, institutional college and university endowment funds. They're very large funds.
Correct. And
Oh, yeah.
So this is universities as well. This is state and
no,
local.
this is just public on this, on these slides, just public funds.
State and local. yeah,
Just, not endowments and foundations,
you
which
look
tend to have
If you're
even
from
a
California.
higher allocation.
Girl Scout
Right.
weapons.
Yeah. Okay.
Colleges.
So it's good to look at. We're 0. This is 66. The question is, what's an appropriate idea?
Yeah, and
Yeah.
this is just to provide perspective, and I don't think we just want to follow just because others are doing it. It just with respect to what's right from the town, from liquidity, costs, and the impact to the discount rate. So, we'll continue to, evaluate the merits and the impact on the town.
So I think you mentioned this earlier, are towns like us that are overfunded or close to funded also dabbling in alternative investments, or is it more for the pensions that are at 70-80% funded and they're trying to get up?
I
Do you
mean,
know?
just generally speaking, it's plans that are more underfunded.
Yeah, they're trying to catch up.
You're trying to catch up,
I don't think that's a correlation though.
That's
Funds
for-
are doing, everyone's doing it, across the board. So I don't think it's a correlation of being underfunded and investing alternative. They might be trying to get higher yields, but I think it's reducing volatility. So I would doubt it if that's the
Interesting, yeah.
correlation. It might be the case because most of them are underfunded.
Mhm.
I don't think that's a direct correlation.
I'm not sure it's guidance for us either. Just because we're
No.
overfunded doesn't mean we shouldn't.
Right.
I agree. I'm just curious.
It just changes the calculus. a little
Yeah.
bit.
Correct.
What role does this diversification play?
Right.
And reducing volatility certainly is
Right.
an
Component of
objective
that.
worth, chatting about, and whether or not.
And
it
6 months
plays a
from
role.
now, we may know a lot more and
Sure.
the product might look better or worse. So we're starting.
Okay. What else did you want to?
Anything else that people just had
That
about
was
general
interesting.
investment? before?
OPEB, anything specific on OPEB? This has really been on just on the pension on the
Yeah.
OPEB. Or
I mean, things are good.
No, I mean,
We're good.
we have more regular cash flows out of the pension plan, paying beneficiaries on a monthly basis. And that's where I was mentioning, we use cash flows to rebalance. On the OPEB, we get usually an annual contribution, but it's not really distributions.
Yep.
So nothing specific to the OPEB. And the Mildred Marsley, the outflow is to pay the scholarship. I think it comes out twice a year.
And how many scholarships have we been? Is it still just a couple or is it expanded?
I don't have insight into the
It's just one now?
scholarships.
One recipient every year.
Didn't we do two once or twice? No, it's just one. Okay.
Any other questions for Brian? Great, thank you. Thank you very much.
We
Good.
get
Thank you,
great
everyone.
service from Brian and
Thank you.
reasonable fee. So,
Yes,
thank you.
Thank you.
and thanks for the performance. No mistakes. Pretty good.
Yeah, thanks, Brian.
Thank
All right,
you.
great.
I'm gonna stop sharing here.
Okay, let's go through financial update. We've got some line item transfers, and then we need to talk through the mill rate and finalize that tonight. So that's really the next tranche of activities.
Yeah. No, take it. Some more. Warm seats. Wait.
All right.
All right, so on your tablets, you should have the year-to-date financials as of April 30th, FY '22. And I'm just gonna start with the revenue side. We're at the 83% mark for the year, just as reference point. The overall revenue is at 100.7%. And the two tax collect lines, current and prior, are both at 101%, which in terms of dollars is 1.5 million above what was budgeted. Building permits, conveyance fees are at 114 and 160% respectively, totaling 775 over what was budgeted for this year. Parking is still lagging behind, as we've kind of discussed, at still 58%. There may be an uptick in other revenues that may be on pace to outperform what was budgeted by maybe 100,000 or so.
That could end up plus 100.
I think so.
Okay.
Yeah.
I'm writing it down in ink.
What would that be?
That's why I lowballed it.
I saw you had. Right.
On the expense side of things,
Oh, just on the cost
Sure.
grant.
sure.
What about the cost grant? Board of Ed? Because right now that's showing a negative 263.
The next tranche is due to come in sometime in May, the end of May.
In a
or-
couple weeks.
So we're in May, so we're due to get the last one. They finalize and true up the reimbursement, not the reimbursement, the submission by the Board of Ed. Then they get the last tranche that comes in. So that's due to come in end of May.
So your forecast for us being over our revenue budget is
We're going to be about, right now, conservative.
just on the revenue,
2.3 million over.
2.3
To the good,
to the good,
to the good.
and then you
What
might have a
percentage
little
is that?
upside.
Do you know? Because we budgeted 98.5, so the 2.3 is,
Oh, well, that's include everything. That's not just tax.
1% is a
So-
million.
I know, but I'm just,
1.5.
About 1.8%.
yeah, so we're just basically under. I mean, no.
Yes,
Well,
yes.
2%.
collections.
Because we still probably have another 400,000 we're going to collect in taxes for the next,
Right.
2 months.
So 2.3, the good.
Great, yeah.
Okay. How's Josh doing on spending?
Well, spending is actually is more of a difficult one. We're good, and I'll tell you why, but we're going through all the different line items, different savings, only because if you can imagine, gas, oil,
Oh,
you know,
yeah.
all
Terrible.
those major utilities, they're gone up, something that we were paying $1.50 in January, we're now up to $6. So we've seen significant increases. I've asked, DPW went through all their lines and asked for where they think they're gonna be for the end of the year, which is, they're gonna be a negative, probably 123,000 above and beyond what they had already. So we're working through people's budgets to say, where's those savings on things? You know, a lot of people have, you probably know, encumbrances open right now.
Mhm.
What encumbrances don't you need? Unload them so I can do the transfers to make sure those accounts are brought up to date, so we have it. So that's what we're working through each of the departments, and
Fair enough.
you'll start seeing transfers come in front of you, moving between departments, because we need to get those utilities back in line. So I wouldn't say there's going to be any give back on the operating side right now. It'll break even.
What about the Board of Ed? It looks like it's flat so far through 10 months.
I haven't seen anything come through on the Board of Ed for savings. There's other items that could, but we have to wait and see what their numbers come in.
That's interesting that they're flat year to year or slightly down after 10 months. So there's only 2 months to go.
So but right now, just as we think through the reserve fund, you would say 2.3 to the good. We budgeted 5, we probably won't use 5.
So we're gonna,
If expenses are flat and revenues
right,
are
we'll
up
probably
2,
draw
3.
down 2.96 or somewhere around there. 2.9 we'll draw down.
Okay.
So if we're saying like our, do you want to segue into the fund balance at this point?
Well, that's just where we're going to end up going here to
Yeah.
get to the mill rate.
So-
So I don't mean to jump ahead.
I just figured I'd go into that one then. if we're
That's
going.
fine. Keep
So,
going.
The total fund balance for the general fund was 29.6 at the end of 21. We had an unassigned of 21.4, which is our unassigned is what we can
Right.
use. We had an assigned of over 7 million. I got the number off now. 7.8 million. And the question came up of what is in that assigned balance. So we had Josh listed them out here for you. I'll give you a quick overview. So compensated absences is when it's basically a reserve for if someone leaves, sick time or vacation time, whatever we need to pay out. So that's the reserve we keep on the books for that. Right now it's flowing through our general fund and we're not touching the reserve too much. But if it got to the point where the numbers are large, we would go over budget and let it use the reserve. Heart and hypertension, as you can imagine, they're claims that we have, usually be uniformed. We have a reserve on that. We do have a budgeted amount that we use, but we do need to have a reserve because the number's higher. So this is to keep us protected if it went above our budgeted amount, our annual budget amount. So we have a reserve in there. Storm damage that a reserve was put in, I believe it was last year, I forget, it was the year before, was just to protect us in case of FEMA usually does 75%. They don't always do 100. So if it came to the point that we couldn't cover that differential, we have a reserve here on those on that differential if it doesn't cover. And then we had a committed Board of Ed COVID costs, but they still have some left in their COVID fund. So we're kind of over reserved there where we have their fund that still has money in it. And then we have this dollar amount reserved on the fund balance. So that's what makes, and plus, I'm sorry, the budget deficit that we did for last year's budget, the 5.2. So that was what we assigned.
I'm sorry, Ann, is the 1.6 health benefits? all
Oh,
the-
I missed that one.
That's the corridor.
The corridor, the 6% corridor that we keep. For
So
the
that's
Board
all
of
from
Ed.
the Board of Ed, right?
Yeah,
That's right.
It's covered
Okay.
on the Board of Ed.
All right, thanks.
So right now, the way we're thinking of 2.3 coming in, obviously conservative, we would say our unassigned balance, we wouldn't be drawing down the 5.2, we'd be drawing down 2.96. And then if we use the 5 million we're budgeting right now, it would bring our fund balance to about 16.4.
That's
With
not,
that estimate adding back in.
doesn't sound right.
Repeat that again,
So-
I'm sorry.
So I think, right now, as I said, our unassigned balance, our true unassigned balance is 21.4. If
Yep.
we don't use the 5.2 million that we budgeted last year, and we give back the 2.3, our unassigned would be 23.7.
Right.
Right.
Then we would take the 5 million off that we're looking to budget right now.
Which would be 18.2 then, right?
I'm sorry, I did it
Yeah.
the wrong way. Yes, 18.
And then if we did a letter of credit to the library, that would bring it down further?
I'm not sure how that's going to affect. I'd have to look into how that's going to affect on us putting it in as a reserve. I'll get that answer back to you.
But we're gonna bond that.
But I don't have all the details on the letter of credit, how that works yet, so that's why I need to find out.
And
Well, it's not a letter of credit. A line of.
that's the line.
Line of credit.
Line of credit, sorry.
And when you're looking at the unassigned fund balance, assuming we draw down 2 million less than we thought we would, but then take it out, that's not taking into account what you think our surplus is going to be at year end, right? The 2.3.
The 2.3 is what we think the surplus is going.
That includes it.
Wait, is that in? Is
That's
that?
taking into account, yes.
Oh, that
Yes,
is, okay, thank you. So if we would be unassigned, what was it, 18?
18.2.
18.
18.2.
This is nuts, right? Can you pull up the last, you've got it,
No, right.
basically the P and L, and it shows the unassigned fund in it. It's not this revenues and expenditures. It's actually you do it every month. You have it for the budget that we moved, actually. You would have it. It's because the revenues, expenditures, and it does show ultimately it's a
Oh,
net
sure,
out
Sure.
of what the unassigned fund balance is. And if you just show what that number was in the budget for this current year, I don't think the number 21 does not sound right, does not look familiar to me. Probably that guy. It's obviously unreadable, but just what's the budgeted?
So we're talking. This is approved FY22 right here.
So that's this year. Okay.
Over there, it's broken down a little bit differently.
What's the
So we're saying
unassigned?
21.5
That's what it says there?
As unassigned.
as unassigned.
But that, let me do.
Versus 21.4.
Well, that's close enough. That's
What's the number there?
what's the year before? Is that the ending balance?
This is actuals here of 21.
Yeah, what was that?
That is 27.
27. That's where I'm a little confused. So we started with 27. We budgeted to use 5-ish, rounding gets into the 21, 22 range. But we're not using the 5. We're only using 2.9. So I'm not sure how you get to 21.
So the 27 from the year before does not take out the funding differential, the funding cliff. So when it's 27, it actually needed to take what the funding cliff between the revenue and expenses were to pull forward. So although it says 27, it actually 27 minus what we said.
Well, that was actual though. Wouldn't it be?
Yeah, but
actual?
in that actual, it's not drawing down the 5 million that it should to show as an assignment. It was treated as an unassignment, not an
Okay.
assignment.
All right,
Yeah.
I'll have to look at it.
Yeah.
Okay.
So the 27 did not net out what we anticipated contributing to the next year. Is
So
that correct?
if you're looking at the actuals from the year before,
Mhm.
it has 2 million odd in assignment. If you can decide that one, 2.8 million in assignment and 27 is unassigned.
Okay.
The 27 includes the 5 million that we were using for
Following year.
the following, subsequent
Yeah,
year.
to pay down the million.
And it really should be showing in the assigned
Right.
because it is truly assigned because of.
Got it.
Okay.
different-
Got it.
So that's why.
Right,
that
but
was-
what was actually used of that 5? Fair enough. Because we were under on expenses and over on revenue last year as well. So that 5 didn't get used. That, because you've got a spreadsheet arithmetic, I
Is
get
that
it.
29?
See what I'm saying? Just on the.
Yeah, the 29.6 is the ending fund balance. Everything
of-
assigned, unassigned, everything, the 29.6. Then we used an estimate of.
But hang on,
Yep.
final, that's the actual audited number?
Yep.
But the 5's washed out of that then, because you didn't,
The 29 is final, but when it's broken down between this 2.6 and the 27,
okay,
27 needs the $5 million taken out to show unassigned.
okay.
because the 5 million above, I think it was, what did we use, 5.4, if that's right? That is in the unassigned. It shouldn't be showing, it should come out as maybe its own line item, so you can see it clearer.
Gotcha.
So it was 19.2 then.
The unassigned at that point would have been, for last year, was 21 and change.
Starting with the 27. You end up at.
Yeah, if you take the 27, take out the 5 million, that 5 million odd, I think, 5 million 290, I forget what it was offhand. Take that out. That's what your unassigned was left. But it would have been 21. It should have been 21,
7.
Oh,
21,
okay.
4.
All right.
Then that's what pulls forward, and any savings now against that is what's going to increase it for you, pulling down the 5 for this year. So if we had unassigned 21.4, we're giving back the
2.3.
2 point, yeah, thank you. And then we're pulling down 5 to bring it down to the 18.
2.7.
Okay, so we now end up, okay, so
You haven't spent the 5, but you
We haven't
could.
spent- Yeah,
we could spend. it.
You could spend it.
right. So it really should be showing as a sign.
That's okay.
Yeah, so you're projecting at the end of June, we'll have an unassigned balance of 23.7 before we pull down for next year.
Yes,
Right, so we
Yes.
get 23.7 and then we decided we're gonna give 5.5 million for next year. Then the projected at the end of next year will be 18.8, but we know we probably won't use the 5.5 end of next year. So end of next year, probably be around 20, even though we're gonna budget it at
Correct.
18.
Yeah.
That's what it's gonna
because
be.
of the collection rate. I mean, we
Right.
were already at 99.65.
Yeah. Makes sense.
Yeah, but the trend's still down on the.
Yeah, because we're using 3 million a year.
Yeah, we're using 3 million a year.
Yeah.
Yeah.
Right,
That's why the
we're not
trend's
pulling
down.
That back, that level, we're gonna
Yeah.
increment.
It's like a drug. We've been using it.
What did we
And,
use
yeah,
last year? I don't think we
and
used
we're
3
not-
last
we're
year.
not replenishing it
Yeah.
at the
I'd have
rate
to
that
look
we
that up.
used to.
But we should, but that should flow through the spreadsheet you're looking at, what we actually used last
It
year.
wasn't 5.
It wasn't even close to 5. That's why I'm not following this last step.
5 that came from the capper.
You see what I'm saying? I mean.
Yeah, no, I see, that's what I'm trying to, real quick, do the math on it.
I understand the way you're showing the 5 now in the assigned. That's fine, but we didn't spend it. We know we had at least a couple million of excess revenues, it may be 3, for sure, at least 2. And then I think we were at least $1 million under on the expenses. So
It definitely looks like we pulled down 5 though. So I'll look into it. Let me compare the 2 years.
yeah, but we couldn't have, almost impossible to have used the 5.
We had the special allocations for the Board of Ed.
Yep.
There was a.
There's a
I know,
couple.
but well, you could go back and look, the revenues were way over.
Did we put 1.9, wasn't that in 21 we gave to the board?
Let's not guess.
Oh,
Let's just get the facts.
Yeah.
What we have
Okay,
now is what we have
exactly.
now. I think that's fine. It impacts our conversation tonight, but I do think we need to just get that. Like,
I'll
let
give
us
you the
know of the
breakdown.
5 that we put aside. What did we actually draw down
Yeah.
of the 5? Okay.
Yeah. Probably a-
Okay, what else did you want to cover then on does anyone have any other questions on
This is good.
current status, financials, general fund? Are any of these assigned coming back? Or you're just going to keep them in there? Health, the heart, storm damage, any of those?
Yeah, we're gonna keep them in. there
Just keep them
right
in
now.
there?
Yeah.
Okay, all right.
Well, other than as I go through the financials now, if there's storm, the problem is we have storm damage in this year's budget, which is over, it's gonna cause an over budget for us. And we don't get the FEMA until a
Right.
later point. So that's where sometimes covering it from that aspect, that if we
That's
go over budget, we have the reserve to cover it and we're not going into our unassigned.
What are we expecting in FEMA?
They're actually currently pulling it together right now, so I don't have, unless, I don't know if he's still on the call.
Bill's here. Bill's here.
Bill? Oh, there he is. Bill's in the middle of pulling all that information together for 21's expenditures because FEMA is so far behind on what they want.
We didn't have the major storms though. It shouldn't be too much, right?
600.
What we're doing COVID and we.
Well, yeah.
Isaiah.
That's it.
We got that money this
Yeah,
year.
that's a big one.
That's it. Yeah.
It's quite a bit of money. It's just slow coming because FEMA's.
Always. Yeah.
Yeah.
And how much, what do you expect in hypertension? Are you expecting a lot of claims?
It's the It goes through what the liability is. We get that
Mhm.
through our vendor. It goes through what the liability is, and then what do we think the payouts are every year, which is what HR works
Right.
with our vendor.
Yeah.
I believe it's Perma. And they work out what they think the annual expenditures are, and we put that into the books. But if something actually came out that suddenly something happened catastrophically to one of our employees, we have that reserve to protect us. That's what we.
Yeah, but we generally know how many claims we have.
Yes, oh no, they
so
know
we-
exactly who's
okay.
out there. They know the long-term, the liability of it. It's outside and above that, again, outside of the budget that is put in every year
Okay,
to make sure we're still protected.
all right, so we're okay on that.
Yes,
All right.
yes.
Well, every year we've been slowly giving that money back to the taxpayers, right? Our fund was massive and it's
Yeah.
been, we worked it down.
It's come down and just so, you know, because some people think when they see an over budget on the financials, sometimes you have to go over budget because that's the accounting of it. If you don't budget something and you have the reserve sitting in your fund balance, if something happens and you have to pay, just say you have to pay out $100,000, that's not in your budget. You actually go over budget that 100,000, you don't look to cover it. And then when it rolls up to your fund balance, you reduce it. That makes sense. That's how the accounting of it would work. Some people think, oh, we're over budget. Well, no, that's the mechanism to get it to the reserve. So you reduce the reserve.
Okay, so unless there are any other questions, we're really combining the conversation of 7 and 8 together. So right now, as you all know, the opening bid on the mill rate was up 1.49, I believe, right? Was that the 1.49% increase? That's the budget that we put together and moved on to town council and so forth. And that's where we are right now. That would imply this $5 million. So question, input, ideas, thoughts, recommendations, suggestions?
Well, I kind of, I would be supportive of what I thought I heard Michael say when he was running through the summary numbers and making sense of the prior 10-minute discussion. But I think he used a 5.5 number.
He sort of snuck that in there.
Yeah, and it was
Kinda
just a little
strange.
skittish higher, and I wouldn't be opposed to that, actually. I don't know what others feel, but that would bring a mill rate of what,
It would be
1.14 increase.
1.1, yeah.
Yeah, I think we could do that. It sounds.
Chris?
Doesn't sound.
You can do it.
You know,
Maria, did you?
That's.
Yeah, I would be okay with that as well.
I'm just a little concerned with, you know, a lot of these budget numbers we put together, the world looked a little better in terms of fuel costs and stuff like, I just think we might end up having some expenditure problems, expenses next year. That might be just, you know, inflation adjusted ones that we go, that we might face with the budget going forward. It's just a little bit uncertain times in terms of where things are going. So I'm, you know, $500,000 more one way or the other. I don't think it makes a huge amount of difference in terms of the mill rate. And I just think it's, I have a bias towards keeping a little bit more in reserves personally.
If you run 5.5 through as your budget calculation, you're going to reduce your amount raised by taxation because you reduce your mill rate. Then that's going to play through on your over collection. So on the one side, I think your over collection might be less.
Pretty de minimis.
And if we're, but it might be
Pretty-
a couple 100,000. And if we are concerned about costs creeping through, okay, inflation creeping through a budget, we have to go back and use all of the budget, even if we don't have to do special allocations to cover overruns, but nothing comes back. We don't get the underspend that we have had over the last few years. Then you're not replenishing that pot.
Mhm.
Well, I think the answer is, I'm fine with either 5 or 5.5 million, but if you think about it, we're going to be at 23.7, right? We're projecting 5, let's say we take 5.5, we're going to project 18.2, but we're never going to be 18.2 because we're not going to use the 5.5. We're probably going to end up at 20 million.
20.
But we also have that healthcare benefit, which if the Board of Ed uses it, then we don't have any extra, but if the Board of Ed doesn't use the whole 1.6, we have an additional whatever they don't use on top of the 20 million. So it could be 21 if they don't use it, right? If they use it, then we're only at 20. So my
Yeah,
view
we
is,
don't know that.
you don't know that, but the worst case scenario is 20. There could be some upside, but they use it all, it's at 20. If they don't use it all, it could be higher than 20. So the question is, are we comfortable with a $20 million unassigned balance at the end of next year? That's the question.
Well, that would be okay for next year, but then the question comes, what about the year after? Are we kind of
That's a
saying
good
we're
question.
okay to get to 18 and then 16? And then-
Well, that's a good question. is What do we do next year, right?
and-
You'll have a
and at
rebound in the
and
middle
at
of
what
that.
point
How
do we
much does
say,
that
you know, folks, the real rate of taxation here is 50 basis points higher. And, you know, we've been protecting you from it.
Well, we're protecting them with their money.
That's right.
Yeah.
But true.
And, you know, and then if it's true, inflation, et cetera, but you know, if you buy down this mill rate, you're leaving more money in the hands of our residents to deal with their own challenges with inflation.
Right, but someday it's going to come back where we're not going to have the flexibility to throw in.
Right.
Yeah, the pot of money to buy down the mill rate.
To buy down the mill rate.
Right. So the question is, do we
Or-
increase the mill rate when that happens? Do we get it down to a reserve level, which makes sense? And at that point, of view, let's say 20 million is the right number. Then say, okay, if 20 million is the right number, then we're not buying down your real rate in the future, and we can increase it at that point.
You don't buy it down at 5 million a clip, you buy
Right.
it down at 2 million.
Right, and then maybe
That's
1
right.
million the following year and then 0 or whatever. So the point is, do you want to increase the mill rate now or
What-
to
what you
further
have to
increase the
hope
mill
is
rate
that
later?
Coincides with a revaluation
Right,
and that the mill rate number gets a little lost in the process.
Exactly.
Yeah.
right,
So what looks like 18 reverts back to 17 or 16.
right.
But in fact, your amount raised from taxation is still going up
That's
because
right.
you no longer have the
Right.
reserves
Right.
to buy down.
So is it better to wait till then, till the rebound,
That's right.
is the question? It might be perception, from a perception point of view, it might be better, right?
Yeah, I think that,
It's a-
that Tom's direction, giving a little bit more money back to the taxpayer this year,
Right,
since we have it, might not be such a bad
yeah.
solution, but we just have to go in there with our eyes
Eyes wide
open,
open. We
knowing that
do.
next year and the year after,
Dig
we,
yourself a hole.
it gets a little
That's
tighter,
right.
You dig yourself a hole.
unless things all work out.
Kevin?
But if they don't,
Well, just in response to Amy's concern, and the reason we have a 4.58% increase in the expenditure budget is because we budgeted generously for increases in the non-wage categories.
That's fair.
We're anticipating the inflation,
That's fair.
and otherwise the compensation is pretty much 2.5% locked in. So
That's fair.
but where was that coming?
From
the
this.
4.58% anticipates a lot of inflation
Oh, yeah.
on the
This is not what we're-
non-compensation numbers.
Yeah, those were.
And comp is already baked in it.
And your budget.
Yeah,
was-
exactly. I don't
was-
think that's
on
in
that
there.
one was higher this year.
Yeah.
So it reflected some.
Yeah.
some planning on this.
Yeah.
All right.
You just leave it
Well,
for-
we also have
We're pushing rates.
the opportunity, now to be thinking about how to spend less next year during the year. Just because we have the budget doesn't mean we have to spend it all. And that is, well, it's a serious hedge for wherever we can avoid expenses. You've done a good job. Tiger and everyone's done an amazing job over the last 5 years doing that. So let's not forget that, right? Any $500,000 or $1 million that we save
Right.
takes pressure off of the leverage use of, the use of the buy down. Well, I'll make the unpopular suggestion that we go to 4.5, because I have one concern in this budget. It's the only thing that keeps me up since we passed it. And it's the conveyance fees. I think we budgeted, what was the budget number for conveyance fees?
It's a 2 million.
2 million, which is less than this year. That, right, we conservatively budgeted below because we knew we sold a lot of houses and we had a lot of activity, building permits and so forth. But do we really see that many houses? Maria could tell me, how many houses did we sell this year, roughly ballpark? If you had to guess in New Canaan during from July 1st to, this month, pick a number.
I don't know off the top of my head, but I will say that I don't see demand
No.
decreasing.
You don't say
We don't
decrease.
see a
Okay.
decrease.
You also don't see houses to sell.
Yeah, but you have supply.
That's my
Supply.
point.
Yeah, yeah.
It was partly that.
Yeah.
Demand may be there, but
Yeah.
there were 400 on the market. Now there's 50 or
Yeah.
something.
Yeah.
Right, but
That's.
I mean, so demand is going to be outpacing supply 3-1. So
Wow.
for the next foreseeable future for 2 years, that's
No.
nationwide. But I would expect that at some point there's going to be more of this loosening up still.
So that's a good piece of data. Okay.
So these conveyance fees maybe are a little stronger than we thought.
Well, if we have the volume,
And parking will come back.
right?
That's the volume.
It's a volume.
And
Yeah.
building permits, I would expect would continue as well.
What did we budget parking for?
60% of prior year.
Parking is 890, I believe, or 900. I have the final.
I
info.
hope it comes back.
It was 1,000,001 in 21 budget. We're
Yeah, I thought we
half
brought
of
it
that.
down from there.
Yeah.
Yeah, which is smart, but it's getting crowded. You have to park
Get that.
farther over, right?
Is that right?
Yeah,
All right.
yeah, in certain days, not
My
Fridays.
concerns were all about revenue. Will all that revenue come in? And you've gone back to saying probably on the conveyance, probably on building, and parking should actually exceed. Okay. All right. Well, do we have a motion for five? What do you want to do? 5.5 million?
We'll do 5.
Is there a consensus on that? Is anybody
I'll make
Neil,
the
you don't want to do any, you want 0.
That sounds like, no, I mean, the difference is.
Doesn't matter.
Yeah, it doesn't matter, but
We've done this a long time. We've seen it never fail. So we can manage it either way.
okay, calm. Anybody have any disagreement, Victor?
Why are we
Chris,
doing another?
five and a
It
half?
doesn't make a big difference to do another half
It
million. So
doesn't
why are we
matter.
doing it?
We're-
But it makes the
Say again, Amy?
taxpayer feel
Amy, say
better.
again?
I said,
Yeah.
it's de minimis, the half million,
Well, not
to
the tax.
put more into the general fund.
So you're saying go to 5.5?
No, I
What
did say 5. And we said 5. There's no compelling reason to go to 5.5. It doesn't do a heck of a lot.
Yeah.
And if we went to 4.5, it wouldn't do a heck of a lot either. So just, we kind of, I just can't see any hugely compelling
Well,
reason
there are
to do this.
arguments on both up and down that.
So just stay in the
cancel
middle.
Each other out. So maybe we're better off with our original.
I mean, we're clearly in an area where reasonable people can disagree.
Oh,
And I
yeah.
don't think it makes a huge difference.
I agree.
I just, I thought it was worth exploring 5.5.
Picking up on Michael's
So I'd
hint
be
there.
perfectly happy going with 5.
Okay.
That's where people felt.
Well, if that's the,
Look,
okay,
I'm
with-
fine, but I think it's the perception. Do you
I do
want to have a
too.
mill rate increase about 1% or 1.5%?
Yeah.
My gut is I lean towards what Tom says, have a mill rate increase with only 1% this year. There's gonna be a reval and the perception is gonna be a lot better to do the mill rate increase at that point in time. I just think, but I'm not gonna say I'm gonna die on my sword for 5 minutes.
I don't
Yeah.
care.
October, but you won't see it until the following year.
well, we won't do it in this next budget?
No?
The next year's
23?
budget?
No.
But you'll see the
Reval's next
trend,
October,
yeah.
not this
Yeah, it's a
October.
lag.
Oh.
You'll see the
That's
trend.
why we have 2 years that that's the.
Okay.
point. We
Yeah.
have 2
Okay.
years that we
No,
have
it's
to.
not a
kind
good
of-
argument.
Right.
Well, can we commit to trying to find $500,000 of
And
cost?
keep in mind,
overrun?
the values will be next October's values, which could be not this year's October.
Could be higher.
Where
Exactly. Could be higher. We'll be higher, right, Maria?
All right, I'm hearing grudging support for 5.5, lots of support for 5, no support for 4.5.
I think that's
That's about-
a
That's-
fair.
I agree.
that's fair.
Is that fair?
That's a fair analysis.
5.25, that's what.
I
All
think
right.
it does matter to the taxpayer. I always have, yeah.
Well, if can I have a motion on, why don't we start with the 5.5? That was on the table. Is there, people want to support that or?
I'll make a motion from, go ahead.
Go.
You want to-
No,
okay, I'll make a
You've
motion
done
for
the
5.
analysis.
It would be a
so go.
motion of, really the motion is for a mill rate increase of 1.14
Yeah.
at 18.372. That's actually not to take your motion away from you, but that's what we would be moving.
Go ahead, Judy.
I will so move,
Motion.
1.14.
Judy, a second.
I'll second.
Michael, all in favor of putting the mill rate to 18.372 with a 1.14 increase, please raise your hand or say aye.
Aye.
All right.
Ooh, it's a narrow, what is it, 1? 2?
Close?
Yeah, just put the hand.
Okay, you have
We have
Michael,
to put our, yeah.
If you could just, all right, so Chris, who's voting in favor? Is that Tom and Chris?
Stay at 5.
So it's Tom and you and me and,
Rod,
it's-
Judy,
yeah.
and Michael? Is that correct?
now you can vote against or you can
She's
you can
getting-
sustain.
She can't, oh, she's not seated.
She's not,
Oh,
she's an alternate.
So I need to know who's against.
Okay, you can vote against, you can abstain. So are those against? Opposed? Any abstentions?
It's a weird one,
Voting, you can
I
vote
just
no.
abstain.
You can abstain.
No, I'm gonna vote no. I'm just gonna vote no.
All right, I'll
He's
go
not
with
on,
Amy.
actually,
I'll
he's
go
not
with
on.
Amy. No.
Just no. I mean, it's silly, but
She's abstaining. You're voting.
no, I
no.
switched to
both
no.
saying
I
no.
switched to
You're
no.
both saying no.
No.
You want to,
Say no, Victor?
Yeah.
you want to keep, you don't want that, you don't want the tax rate of up 1.14.
Is anybody?
That's not what I'm saying. That is not what I'm saying at all.
Can't have it both ways. You can't.
At
No,
all.
but
What
you wanna
I'm
lower that.
saying is let us not spend $500,000 more out of our savings account. It's not that I'm saying I want the taxes to go up higher.
No, we know what.
Okay.
No,
All
that's
right, so
exactly
you
what he
have- you
said. That's exactly what he said.
We must have two abstentions. Hang on. We have 5 yeses.
Did you vote?
Neil,
You have to
are
vote.
you a no or abstention?
Oh,
I can't see the difference between the two of them. You know? I think I'm gonna back up and go with the crowd.
Okay. Okay, so that's a
You know
yes.
what,
So
if there's
that's a yes.
sentiment- Yeah, that's a yes.
That's a yes.
Can I just verify? Chris Labrie, Tom, Todd, Judy, Michael Chen, and Neil are for the motion.
Yes.
And against are Amy and Victor.
I think
We're still missing something.
Did you vote?
Yes,
You got Judy?
I'm on there,
You
yeah.
got Judy? Okay.
So who are we missing?
Who's seated for Bob?
Right?
Who's seated for Bob?
We're not
He's
cheating.
Oh, yeah.
He's not, he's an alternate.
He's an alternate, he doesn't vote.
When he said I want
votes, right?
Okay.
We got everyone's
So we
vote.
got, yeah, we're okay.
6-2.
6-2.
Motion passed. The mill rate's 18.372, increase of 1.14%.
And the contribution.
And it's a
is about
$5.5 million drawdown, not including the savings we're now all committing to get. Make up for the $500,000.
I'll buy you all a cup of coffee.
Not
with
kidding,
difference.
right?
I wanted to break a tie.
Yeah.
Oh, you wanted to break a
It just so
tie.
doesn't matter.
Okay. That was a big one. Thank you, everybody. That's good work. And
Thanks, Ann.
thanks, Ann. Josh, thank you.
Yeah.
Oh, I'm sorry, transfers, don't go away. Sorry. We have quite a few transfers, actually. What do we need to vote on versus just?
So these are the two that need to be voted on.
Yeah.
It is a $3,000 transfer from the Nature Center Education Annex Boiler. These are both projects to the Vine Cottage generator. And a $55,500, $2.75 transfer from 4 projects to the Vine Cottage painting project.
Okay, motion to, we can do, let's do one at a time.
Can I ask a question? Did the Nature Center boiler is this extra money left over from putting the boiler in? Okay.
Yeah.
Thanks. So they have a boiler.
Yeah,
Okay.
they're done and it's extra.
Extra.
funds,
Okay, thank you.
That need
Good.
approval.
See, we do a good job at controlling our costs.
Okay, so a motion to approve the $3,000 transfer from the unspent monies on the boiler to the generator.
So move.
Chris, second. Amy, all in favor? Aye. Opposed? None? Okay, thank you. And then a motion to move from 4 different projects, the Annex HVAC, the Powerhouse Paint, Nature Center Painting, and the Education, Nature Center Education Boiler funds to the Vine Cottage Painting project.
So did that project come in at 55,000, the painting project? The bid for it?
Yeah, I believe it's, that's the bid for it. The bid
Tiger,
for,
the-
Vine
yes,
Cottage,
or Bill.
you got a bid- Oh,
Yeah,
there
we're
is.
out the bid. Fine,
Yeah,
that's
we
what
went
I'll
out to
do.
bid.
And that was the price for it?
That was the price.
It's a little higher than we thought.
It's painting and woodwork. We're
Okay,
gonna
so it's
do a
got
lot of replacement
Great.
wood.
Good,
Right,
okay. Okay, motion to approve that transfer.
So move.
Amy, second.
Second.
Neil, all in favor?
Aye.
Aye, opposed, none? Okay, you're good on all the transfers?
Those are just to approve, just the, there's 33,000 to just review. But they're just admin transfers
Yep,
within
those are all-
departments mainly.
Nickels and dimes.
Okay.
Good, thank you. And thank you, Josh.
Thanks, guys.
Okay. Now, I need a motion to,
Laura, before you go. Can you stop sharing? Sorry. You had said that you would entertain more about the Chamber of Commerce. to speak.
oh, thank you. Yes, is Laura on?
Laura is on.
I can't see her.
Yeah.
Here she is.
So we did, it just wanted, as we're gathering data and information on the Playhouse, of course, and before we go into executive session, because we're not going to invite Laura into executive session, I think Laura had some comments and some research she had done, right, from a chamber point of view? Okay. You want to share some thoughts?
Yeah, hi.
Thank you.
Are
Hi.
you ready for me?
Yes.
Okay. I'm Laura Budd, live at 22 Thayer Pond Road. I've worked at the Chamber of Commerce for 10 years, and I've been the executive director for a year and a half. And I would like to express the Chamber's resounding support for rehabilitating the Playhouse and keeping it as a functioning theater. Obviously, the Playhouse is the anchor tenant for downtown. This 100-year-old building is a true asset. And it's really has a great potential to serve as a community hub. I think you guys have been getting some letters from residents. I have polled a lot of the Elm Street merchants. The support is overwhelming. People really do want to have that there. The business owners really feel it will help attract people, especially from out of town. We talk a lot about placemaking. It's a concept that is used a lot in talking about revitalizing downtown districts. And having a theater like this that's unique and authentic is going to be a particular draw. What it's really going to let us do is set New Canaan apart from other communities. Wilton, Darien, Greenwich no longer have movie theaters. It gives us a great opportunity. So a lot of those residents are going to come to New Canaan because they might not want to go to the megaplexes. Everything is experiential. If you look at our downtown, you see the difference in the retail environment. We're seeing more hair salons and medical treatments, and people are looking for experiences. Our traditional downtown is changing, but in a good way. We're still getting these incredibly passionate and professional businesses to open up here, but we're not going to get any more of the big box stores. So if we say, all right, we don't want a movie theater, what's going to happen to 93 Elm Street? We're looking at most businesses that are opening up here, and we really are seeing some traction in that area. A lot of the empty store fronts that you have seen, the smaller ones have been spoken for, or their deals under negotiation. But most people are looking for 1,000 to 3,000 feet. If you look at the Playhouse, it's about 8,500 square feet. And it would be difficult to get that on the retail, to find a big box retailer who would want to come in and take that space. I think we have to look at the Tolly space as an example. Now, there's a very unique building, not unlike the Playhouse. It's about 4,000 square feet. It's been empty for years. There's obviously a lot of extenuating circumstances with that. But if that's a place that has not been able to find someone, I think it would be difficult. New Canaan, because of our distance from the major highways, has a much lower annual average daily traffic rate. No surprise. We all feel our downtown is crowded if you come down in the middle of the day, but retailers, we are between 50 and 70% lower than some of our neighboring towns, obviously based on the major throughways, the Post Road, Main Avenue, et cetera. So it's going to be difficult to attract, we can continue to attract small micro chains, but it's going to be difficult to attract those bigger chains. So I think that it's important to say, let's keep this asset to go along with the Glass House and Grace Farms, and to attract people from out of town through our uniqueness. Almost done here. I just think that this is a great way for the municipality to support the business owners. A lot of people come to us and say, can't you do this? Can't you fix the rents? Can't you do that? And we can't as a municipality. We're not a mall, but having a thriving theater that'll bring people in from out of town and serve as a community hub, A lot of the businesses said, oh, I would stay open later. We'd love to partner there. I know nonprofits would like to use the space. And then lastly, I'll point out that I did read in the local press who the prospective operator could be. And I took it upon myself to reach out to some Chamber of Commerce's in some of the towns that they're currently serving. And all the reviews have been positive. They said their business community has benefited. They like the way that Cinema Lab has a method of doing business, but they adjust to individual community needs. They're serving the movie theaters are serving teenagers, seniors, and bringing people in from their surrounding towns. So I think having the theater really will have a multiplier effect on our local economy. So I hope you will, approve all the funding needed to get this project going. And I'm the last one that should want this project. I'm going to lose my great office spot right there on the 50-yard line. But I know this is really what's great for the downtown. So thank you for your time.
Oh, thank you. Any questions? Anybody have any questions?
I would add one more factoid that, so a week ago Friday, I was in Manhattan visiting a neurological ophthalmologist. And after my appointment, he says, don't let them close that playhouse.
Oh,
He lives in
really?
Armonk. So I had no
He
idea.
knew that.
I didn't know
Wow.
how he knew that. So
Wow.
Excellent. Okay. All right. Thank you so much. Yeah. All
Thanks.
right. We'll need a motion to go into executive session, and I'm inviting in Steve, Tiger,
Bill,
Bill, of course,
Ian,
Tucker.
Josh, if he wants to
Yeah,
stay.
and Josh, you're welcome to stay, or if this is you want to use an excuse to go home, this is it. Otherwise, you're stuck. Okay, I gave you an out. And then who do we have on from? Cinema Lab?
Tiger.
They're not- they're not on.
Give me a minute
Okay.
to move everybody else into.
What about Doug? Doug was on this.
Doug Lamonte, our
Doug.
town attorney.
Thank you.
Please.
Okay, I need a motion. We can motion and vote. Okay, motion to move on this executive session.
So move.
Tom, second.
Second.
Victor, all in favor? Aye. Opposed?
Hold on.
None. Okay. I don't want to have to hold on. We can make the motion. That timing. Okay, well, now we've moved out of executive session. We're moving on to item number 10 on the agenda. I need a motion to approve the transfer of $750,000 from the New Canaan Playhouse Fund to the Capital Fund for necessary repairs and upgrades to the Playhouse. Motion, Chris, second? Thank you, Chris.
I'll second.
Second, Tom? All in favor of that transfer? Aye. Opposed? None. Okay, so moved. Very good. Okay, we will be tabling number 11 because we need to have an approved LOI and a process with the Board of Selectmen agree to the LOI and agreements with our partner. So we'll put table number 11. And the last thing we have are the capital projects. Is that the last thing?
Yeah.
Okay, we have a number of capital projects. So
Yeah.
I wanted to suggest we do two things. You're gonna love this. I think we want to table the police station only because they're meeting tomorrow, Thursday. And the number we have here, as you all remember, was thank you, placeholder. And we're actually getting a real number in 2 days. I think it's a little silly to approve a number we know it's not going to be right. So we all agree we want to move on the police station. This isn't a backing away. It's just to get the number right. So we're not going to tentatively prepare or approve a number that is going to change in the next 48 hours. I'd like to then suggest we move all the others in one vote rather than take 14 specific votes. But if everybody's okay, could we take, you want to just tick through them real quickly, one at a time?
Any
Everybody-
discussion? Yeah.
And then if anyone has a question or a reminder, I have all of them right here.
Yeah.
So the first one was the approval of the $150,000 for the tax assessor 2022 project. You
Let's just have Judy read those into the record.
want to read them? Well, they're in the record.
Well, I don't know if we're legally required to do this, but every year when I ask, you want me to read them, so I'm happy to read them.
Why don't you read them? Well, anybody has a question,
Yeah, read
we'll
them.
go through, we'll go to the next one, go to the next one, go to the next one, and then at the end, we can do one vote. Everybody okay with that?
Yeah.
Okay.
And then eliminate the one that was for police station. Don't-
Yeah,
Yeah, I
we will
will,
table
yeah.
number 4, I think. Yeah, exactly.
Now, do you want me to read them all? You want to approve each one after I've read?
Nope.
No, read them all.
Okay,
Read 'em
all right,
all.
all
We'll do
right.
one vote.
All right, tax assessor, approval and recommendation of the town council, a resolution entitled Resolution Authorizing an Appropriation of $150,000 for the tax assessor 2022 project and the financing of said appropriation by the issuance of general obligation bonds, of the town, and notes in anticipation of such bonds in an amount not to exceed $150,000.
Any questions on that one? We all remember this one? Okay.
All right.
See the next one.
Information technology, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $160,000 for the Information Technology 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $160,000.
Questions?
All right, emergency management, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $133,292 for the Emergency Management 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $133,292.
Can someone remind me what this was for?
It was the, wasn't it the, the trailer and the,
Tiger, was that the,
Back.
the,
The Motorola contract.
Motorola,
Yeah.
you're right.
Oh, yeah.
It's
Thank you.
Second or third year into that.
Thanks.
oh, is that what it was? Third, all right. All right, town buildings, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $1,084,000 for the DPW Town Buildings 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $1,084,000. Any questions?
What's that project?
All right,
questions?
anybody?
Is that a whole bunch of projects, Tiger, or just one? I'm sorry, I
Oh,
can't
it's a
remember.
lot.
It's a whole bunch.
Okay, fine. That's fine.
All right.
Thank you.
Administration and engineering, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $2,795,000 for DPW Administration and Engineering 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $2,795,000.
Questions? Okay.
Highways, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $530,000 for the DPW Highways 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in amount not to exceed $530,000. Anyone? All right. Parks, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $1,537,500 for the DPW Parks 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $1,537,500. Comments?
Pretty good.
Waveney Park Playground, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an appropriation of $455,000 for the Waveney Park Playground 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $455,000. No, all right. Dunning Stadium Lights, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $450,000 for the Dunning Stadium Lights 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $450,000. Anyone? Irwin Park Boardwalk, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $175,000 for the Irwin Park Boardwalk 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $175,000. Comments? All right, schools, appropriation and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $2,633,750 for the schools 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $2,633,750. Anyone? All right, Innovation Center, approval and recommendation. You comment or
You have a question?
do you have a question?
Just, you're reading it, so.
No, you want me?
Innovation Center.
Yeah, but do you want me to stop? You have a question?
Yeah, I'd like to know what it is.
They presented it as part of the budget process.
We just forget.
I'm going back, I'm trying to,
You remember what it is?
yes. It was they were putting over at the high school, where it's gonna be like a tech lab innovating
Okay.
all these plans.
Okay.
Thank you.
All right. Didn't ring
It's on the
a bell.
Board of Ed list.
Okay.
Oh, yeah.
It just was enrolled up in it. That's why.
Approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $200,000 for the Innovation Center 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $200,000. Planetarium, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $350,000 for the Planetarium 2022 project and the financing of said appropriation by the issuance of general obligation bonds of the town and notes in anticipation of such bonds in an amount not to exceed $350,000. Bond premium, approval and recommendation to the town council, a resolution entitled Resolution Authorizing an Appropriation of $1,180,602 for the bond premium 2022 project and the financing of said appropriation by the allocation of bond proceeds on hand in an amount not to exceed $1,180,602. All right, anything else? No.
Okay, I need a motion to approve those 14 appropriations.
So moved.
Yes.
Amy,
Second.
Michael, second. All in favor? Aye, opposed? None. Okay. Okay, that was the end of our agenda. That was a lot. Look, we covered a lot there.
Quick.
Got a mill rate, sewer fee,
Yeah.
$750,000 transferred,
That's a lot.
Yep.
all the bond resolutions.
It was longer than 9 minutes, Todd. Just
I
saying.
know,
Yeah, but
I know,
that
I
wasn't
know,
too bad, though.
I
That was
know.
about 10 minutes.
I
to
know.
get through.
Anyway, thank you all very, very much. We've got a lot to do. Motion to adjourn?
Yeah, well,
Motion to adjourn? Chris, second? Tom, all in favor?
oh, yeah.
Opposed? No. Tiger, thank you so much.
Tiger, yeah.
Thanks, man.
And Bill.